Hello, everyone. Thank you all so much for joining us today. I am glad that you all are here with us. As several of you know, EGBI's mission is to help provide training, coaching, and support
Hello, everyone.
services.
Thank you all so much for joining us today.
Sorry about that. EGBI is trying to provide coaching, training, and support to help aspiring and existing business owners become successful. And through this time period, it's been very trying for small businesses with being quarantined in our homes and trying to keep our families safe. And then the government came out with the PPP, the Payroll Protection Plan program. And so we have our money. A lot of you have gotten your money, but now it's thinking about how do I get my forgiveness? And EGBI, as well as a lot of our partners, have been getting these questions. So what we are doing today is we are bringing you great CPAs. Those of you that have been with me for a while, you know that I have been telling you for years and years and years, each small business needs to have their ABCs, your attorney, your banker, and your CPA. And this is exactly why. So your banker, they helped you get your PPP money. So now what we need to do is we need our CPA to help how we can get 100% of that money forgiven by the federal government. And the attorney is going to help us to make sure everything that we claim is legal, so we don't get into trouble. And I am so glad today to welcome Rudy Colmenero and Robert Shepard. They will be joining us today from Vacek, Kiecke Colmenero. Rudy Colmenero is one of EGBI's founders. His area of practice is business and commercial law, business organization, taxation. He's been a great community leader. Rudy and I go back several years. I'm not going to say how long, but I'm grateful to have him. And then also with Rudy from Vacek, Kiecke Colmenero is Robert Shepard, whose area of practice is business organization, taxation law and tax compliance, estate planning, probate, and estate administration. Thank you, gentlemen, so much for being with us today.
Thank you, Barbara. Thank you for the introduction.
So I'm going to go ahead and pass it on to the experts.
Thank you, Barbara. Thank you very much for the introduction. We welcome the opportunity to talk to everybody from EGBI for one of the most complex things I can honestly say since I've been practicing is the Payroll Protection Program loans. Joining me, you see both the attorney and CPA. I'm a partner with the firm of Vacek, Kiecke Colmenero. And joining me today is Robert Shepard. Rob's also an attorney and CPA, senior associate with us. And I can let you know this is my 34th year of doing this, and this is the most confusing year I've ever had in doing it. I think Rob would concur in 10 years of doing it. So we have, I know we have an hour. We have quite a bit to cover, so we'll go ahead and get started. Okay, you can go to the second one, Monica. Okay, so the CARES Act, which is referred to the Corona Aid, Relief, and Economic Security Act, signed into law on March 27th in response to the pandemic. The creation of the 669 million Paycheck Protection Program. So we're going to cover just a little bit, going over the initial ways that the program was created. You had to have less than 500 employees. You originated your loan between February 15th and June 30th. The big thing right now is as of May 30th, there's still close to 149 billion left in the kitty. So those of you who have not applied, you have until June 30th. So you're only talking about a little bit more than 2 weeks. So like I said, if you've not applied yet and you do qualify, you're coming up to that deadline of June 30th. And then especially out of the Senate, is that deadline will not be extended. I don't see an extension coming on that one. So please do get, if you haven't had your application in. So the biggest reason for it on the PPP loan was to get people back to work, or at least get them on the payroll, get money back into the community. You go to the next one, Monica. Okay, PPP loans. You have to use them for qualified expenses within the covered period. The covered period we'll go over with in a little bit. Originally it was 8 weeks. It's been expanded to 24 weeks, and we'll talk about that in a little bit later. And then when it's forgiven, when the loan is forgiven, there's no discharge of indebtedness income for the borrower, which means you don't have to pick it up in income. It's non-taxable income to you. And the forgiveness is made by the lender, who then turns to the SBA to request their forgiveness. Next slide, Monica. Now, the loan amount is limited to the lesser of 10 million, or a formula based on your average monthly payroll times 2.5 in 2019. Now, when you were calculating this, there was some confusion when people were first applying on this 2.5 amount in 2019. It did include your wages, limited to 100,000 per person, and it also included employee benefits and retirement benefits. When you're multiplying so you would take whatever you paid in 2019, divide it by 12, and multiply it by 2.5. That's a real simple process, I'm telling you right now, but there were, like I said, it was payroll plus your employee benefits and your retirement benefits. Okay, next slide, Monica. Now, this is right here was on the good faith certification. This turned into a real big issue when the first loans came out, and you saw that some publicly traded companies or large companies such as Ruth's Chris and some other big ones were getting the loans, especially ahead of small businesses. So you had to make a good faith certification that funds would be used to retain workers, finance payroll, make mortgage, rent, utility. Current uncertainty makes the loan necessary to support business operations, and that there's no ability to access other sources of funds to support the ongoing operations. There's also a provision in the application that must be truthful or subject to civil or criminal penalty for perjury. If you go to the next slide, Monica, please. Another rule that what the SBA also announced, and correct me if I'm wrong, was if the loan was less than $200,000, that the 2 million. 2 million. I'm sorry. If the loan was less than 2 million, what was the actual wording?
They wouldn't scrutinize it.
It would not be scrutinized. That's right. If the loan was less than for $2 million, because there were times when people were making applications, and it was really times of uncertainty, because you didn't know exactly how bad the coronavirus is going to affect you. So they did come back later and say that loans under 2 million would not be the same scrutiny as loans over $2 million. Next slide, Monica. There we go. Okay. So the way it goes is you submit your application to the lender, who had 60 days to review. Lender then applies to the SBA and has 90 days to approve. And the SBA may review the PPP loans within six years. So there's a 6-year period where the SBA can come in and look at your application and making sure that you're eligible, the appropriateness of the loan, spending for allowable uses, and the forgiveness amount. Next slide, Monica. As with everything, though, especially when things are put together this quick, there's a lot of room for uncertainty. So between the Small Business Administration and Congress, you ended up with a lot of things that were unclear. On June 5th, the Paycheck Protection Program Flexibility Act became law. It first passed the House of Representatives. I think there was only one negative vote. It was like 437 to 1, if I'm not mistaken, which then moved over to the Senate. The Senate hung on to it for a few days, and there was one senator from, I can't remember, there was one senator that was holding it out, but it finally did pass, and President Trump signed it into act on June 5th, 2020. And what it really did was to help out a lot of the smaller business owners, to extend the period and then decrease the requirements. That being said, there's still more uncertainties coming, and every week something else comes out affecting what goes on. Next slide, Monica. Come back. I think we went one too many, Monica. Okay, your covered period. This was a real problem with a lot of small business owners. The original program provided that you had 8 weeks to use the funds. That is, to use the funds for your payroll and then also for any rent or monthly. So it was a rather quick time period. And you found out that a lot of businesses were not going to be able to use it during that 8-week period because you had to use it from the time that you were funded. The day the bank put the money in your bank account, it started covering that day. So you have certain businesses, beauty salons, restaurants, other types of businesses. There's no way they could even spend it on payroll because they couldn't even open the doors. So that's what Congress and the SBA was hearing from a lot of individuals, a lot of small business owners. Hence the Flexibility Act. They've now changed it, so instead of having to spend the money in 8 weeks, you have 24 weeks to spend the money. So that's almost 6 months. You do have to remember, though, they do count it by weeks. Don't think about it 6 months from when it is. Whenever you got your loans, actually count out when that 6-week period ends. Don't just think, okay, 24 weeks, that's equal to 6 months, because technically it's 2 weeks short of even 6 months. Now, if you borrowed the funds before June 5th, you can still use the 8-week period if you want. And that works for some companies who were spending it, who are still open, and they're ready just to get their loan forgiven. So you can still use it's not an all or none. So you can still use the 8-week period if you'd like. And like I said, that comes very, if you were in business, we do have quite a few clients that are able to use it all. I'm gonna hand it over to Rob right now when he talks about the qualifying expenses.
So this slide basically just gives an overview of what will qualify for forgiveness. Basically you can view all the expenses eligible as quote qualifying expenses, which is up in that top box there. To be able to be a qualified expense, however, at least 60% of it has to be on payroll costs, and we'll talk about what that is. And the other 40% or less has to be on other eligible expenses. So you start running into some problems where more than 40% is on these other eligible expenses, or less than 60 is on eligible payroll costs. But at a bare minimum, as long as it's a 60-40 split, one type of reduction would not apply. There's a number of reductions that could be made to your amount that's eligible for forgiveness. We're going to go through them, but the first one to consider is the 60-40 split on those. And so that 60% that's going to be eligible payroll costs then also splits into a number of different categories depending on how high the amount of wages are to the employees. There's a special rule for ones who are paid more than $100,000 equivalent during the covered period. We'll talk about what that means. And then there's also special rules for owners of entities. So a general partner of partnership is going to be treated differently than, say, a shareholder employee in a corporation. And so those are some of the rules that we're going to get into a little bit further. If you go to the next slide. So the general rule is that to be eligible for forgiveness, the funds must be spent on qualifying expenses with at least 60% requested for forgiveness to be eligible payroll costs. Now, prior to the Flexibility Act, that was 75%. They decreased that requirement to only 60%, which allows presumably some more forgiveness compared to before, but it still has a number of definitions you have to follow to meet that 60% test. Now, what constitutes eligible payroll costs really depends on the business entity type, but as a general overview, potential eligible payroll costs include subject to $100,000 equivalent monetary cap during a covered period. I'll talk about what all that is. Salary, wages, commissions, tips, bonuses, and hazard pay. There was a lot of back and forth as to whether bonuses and hazard pay would qualify. The SBA clarified in their rules that came out right before the Flexibility Act that bonuses would count. So there's some potential opportunity there to pay employees bonuses and potentially have it forgiven under the PPP program. But previously that was not actually clear. Now it's been clarified. Then there's a bunch of different types of expenses that are not subject to this $100,000 cap we're going to talk about. And those are certain employee benefits. Primarily, you're going to see health insurance premiums. You're going to see retirement benefits. And then there's state and local taxes on compensation. Typically, that's going to be your state unemployment taxes. In Texas, since we don't have a state income tax, that's probably the only time you'll see that. Outside of Texas, you may have other taxes as well. It doesn't apply to federal taxes, however, just state ones. You go to the next slide. So we go through to the $100,000 cap and what it means to be an eligible payroll cost. Now, I have an example here because I think really the best way to understand this is to look at an example of what this $100,000 cap means. So if you have an employee who's making $150,000 a year, they're going to be subject to this $100,000 cap because during the year, they're going to be over $150,000. Now, I'm assuming for this example that they're earning their income equally throughout the year. If you have a period where they're making way more income versus another one where they're making way less, so it's not really static, it's going to be a lot more complicated of a determination. But for our calculations, we're determining that it's just sort of equally throughout the year. In this case, so we start with $150,000, but actually we're going to be capped at $100,000. Under the original law, we would then figure out over 8 weeks, that would have been $15,385. So to the extent that the employee was paid more than that $15,385 during that period, that would not be forgiven as to that employee, only the $15,000. Now, technically, the SBA hasn't clarified whether because that 8-week period has been expanded to 24, whether it should now, instead of being 100,000 divided by 8, it should be 100,000 divided by, 100,000 divided by 52 times 8, it should now be 100,000 divided by 52 times 24. But the general consensus from various commentators has been that they expect that 15,385 amount to be 46,154, which would be essentially the equivalent over 24 weeks instead of 8 weeks. But again, without SBA clarification, that's not 100% determined yet. Next slide. Now, salaries, wages, commissions, and tips are really split into 3 different categories for a partnership. You have your non-general partners who are making less than $100,000 equivalent during the covered period. So this is going to include anyone who is not a partner at all, who's an employee of the entity, and they're making less than $100,000. Or it's going to include also limited partners who, and the reason for that is because they do not have self-employment income. And so if they're making less than $100,000, they'll be in here. And in this case, you're just going to use whatever the amount was paid to the individual during the period. You're not subject to the $100,000 cap because during that period, it ends up being less than the equivalent of $100,000 for the period. For a non-general partner who is making more than $100,000 during the period, you're going to have to limit it to that $100,000 equivalent, which again is the 15,385, might be higher. There's really some pending rules on that one. Next slide. But then there's a special rule for general partners, and that's because general partners generate self-employment income. And in a case of a general partner, you have to basically limit the amount you can count as their self-employment income to one of 3 different numbers. One is their 2019 self-employment income from the partnership. Another is the amount actually paid during the cover period. And the third is the $100,000 equivalent amount. So what this really means is if you're going to be looking at the amount eligible for forgiveness for a general partner, you're going to be capped at either the lesser of what their self-employment income was for 19 or what it was for the current period or $100,000 equivalent. You can't really go beyond any of those 3. And then, like I said earlier, you would treat a limited partner the same as any other employee because they don't have any self-employment income. You go to the next slide. So then you have employee benefits. Now, like I mentioned, the employee benefits are not subject to the $100,000 cap. But for the case of a partnership, there's going to be additional restrictions compared to, say, a corporation, which we'll talk about later. You can count the following for non-partners as eligible payroll costs, and that's going to be your vacation, parental, family, medical, or sick leave, group healthcare benefits, including insurance premiums or retirement account benefits. As I mentioned, it's not subject to the $100,000 cap, but it's also not available to partners. And so if you have that going to a partner, you won't be able to count that amount as forgiveness during the covered period. Next slide, please. So then let's look at sole proprietorships. And
So
sole
I take a. So I take a.
No.
Probably not here. One quick thing, Rob finished on that one on partnerships. So there's a real big distinction for the partners I said are general partners. You are limited to the 100,000 per year. You cannot include any benefits or anything. Whereas your non-equity partners or stuff, you can include those. There's a real big distinction, and that one, the clarification came out. One thing that's been interesting, this is just a side note, is the SBA, whenever they were sending out new rules or anything, somehow they always came out Friday evenings around 6 p.m. or 7 p.m. So it left us in this, that work in this arena really over the weekends having to work to figure out what it is, because Monday morning, obviously our clients are going to be asking what happened on Friday from the SBA. And there's, between the tax professionals and everybody, it's been an interesting 2.5 months, I can say. Next one we're going on to is for sole proprietorships. Barbara, if I'm not mistaken, most of the EGBI clients are probably sole proprietorships. This also, when we're looking at sole proprietorships, those of y'all who have an LLC, which is treated as a disregarded entity for federal tax purposes, this is also the same arena that you're going to be filing into sole proprietorships. So salaries, wages, commissions, tips are split into 3 categories. Non-owners making less than 100,000 equivalent during the period. You use whatever amount was paid to the employee during the period. So that's, if you're a sole proprietor and you actually have employees that you pay salaries to, this is where the eligible payroll costs. Non-owners making more than 100,000. So let's say you were Schedule C, you're a sole proprietor, and you do have an employee that you have on payroll making more than 100,000. They're going to be capped at the numbers that we talked about earlier, whether you use the 8-week or 24-week period, the 15,385 or the 14,124, I believe. Now,
46,154.
okay. And then if you're owners, now this is the thing on your Schedule C, your owners, you're limited to the lesser 3 amounts. Your 2019 net self-employment from Schedule C. So you actually take your 2019 Schedule C, and that's what you're being limited to, or the amount actually paid during the covered period. And I know that sounds, how do I pay myself if I'm a Schedule C, if I'm just a sole proprietor? It's probably just writing a check exactly to yourself, just as a draw would be, and just counting it as a draw. Or limited to the equivalent of $100,000. So once again, you're going to be tested on either one of those, depending on if you use the 24 or 8-week period. Next slide, please. Eligible employee benefits. So for non-owners, you can also include vacation, parental, family, medical, or sick leave, group healthcare benefits, including insurance premium, retirement account benefits. And on those, you're not subject to the $100,000 equivalent cap. And by that I mean is, if you're a sole proprietor and you have an employee that you're paying $120,000 to, you are going to be capped at the $100,000 for their actual payroll. But whatever you pay for their benefits, you can exceed that amount. But it's not available. Once again, it's kind of like the partnership. If you're a sole proprietor and you pay for your own health insurance or for your own retirement benefits, it does not count. Next one, Monica. Oh, there we go. Yeah. Let's see.
We're 1 slide ahead, actually.
What slide is that?
Yeah. If you could go back, back slide, please.
Back to 17. Yeah, next one.
That's it.
There we go. Okay. Now we get into corporations. So they have their own set of rules also. So a lot of our individuals, whether you're a C corporation or S corporation, fall under these rules, which are different from the sole proprietor and from the partnership rules. So once again, if you have non-shareholders making less than 100,000 equivalent during the period, you pay whatever amount you pay to the employee during the period. So if their salary was based on, I'm just using a simple example, is I'm gonna use it only because it's, if you're paying them 52,000, which is 52 weeks in the year, so you're paying them $8,000 per week. I mean, $1,000 per week. What you're looking at is you'd be eligible to forgive the $1,000 per week that you're paying them. And it's either based on the 8-week or 24-week period that you want to use. Now, non-shareholders making more than 100,000, So if you do have employees, once again, it goes back to whatever you pay them, but it's going to be based on those two tests. You cap out at either the 14,000 or 15,000 amount, depending whether you're using the 8-week or 24-week period. Shareholders, limited to the amount paid. As shareholders, you're also subject to make sure you actually paid yourself. And this is not a draw, especially if you're an S corporation. And you're paying, or even a C corporation, if you're paying yourself out dividends, those do not count. They have to go through payroll, so it actually has to end up on a W-2 for yourself and included in the 941s. And there's no requirement to compare a shareholder's salary to your 2019 income. So if you paid yourself less than 100,000, if you're an owner and you paid yourself less than 100,000 during 2019, you can, in essence, limit yourself at least to the 100,000. Test for the forgiveness portion. Now, here's a deviation from where we get to where the difference between the partnership and the sole proprietors. Employee benefits, you can count the following as the standard: vacation, parental, family, medical, or sick leave, group healthcare benefits, and retirement account benefits. Now, here's the part that's a lot different if you're a shareholder in a C Corp or S Corp. Also, those of y'all who have an LLC that elected to be treated as an S corporation or even a C corporation, you qualify under this one also. So you're not subject to the $100,000 equivalent cap. Your salary is limited to that 100,000 test. So your salary is limited either to the 14,000 or 15,000, but you do get to use, you're treated like other employees in terms of being able to use the funds for parental leave, medical, sick leave, health insurance premiums, and retirement account benefits. It doesn't seem like there's fairness in between the two, but that's the way the rules have come out at this point. Next slide, 19, Monica.
One more.
One more. Okay. To be eligible for forgiveness, here's where we're going to get to the important part, okay? At least 40%, it was formerly 25% of the amount eligible for forgiveness can be spent on qualifying other expenses. We're going to get into that, qualifying other expenses, because that is probably one of the biggest questions we get. If I'm not paying it on payroll, what else can I spend it on? And there's, I know Rob and I have tons of questions from our clients. If not more than 40% of the amount eligible, this portion is forgivable as well. To determine which amount will be forgivable, you first determine your eligible payroll cost amount. So in other words, you can't back in first and say, I use 40% of it on rent and then work it that way. You first have to test your payroll to see and work it from there to get to the 40%. And we'll walk through an example in a second. Okay. Once again, here we're going into qualifying other expenses. Let's see, one more, one count. There, yeah, perfect, okay. Again, this is probably one of our biggest questions that we do receive. So if I'm not paying on payroll, Rudy, what can I spend my money on? Okay, can I go out and buy a new equipment or anything along those lines? They are pretty limited on what you can use that's non-payroll, because the reason for it was to get everybody back to work and get payroll and get money into employees' hands. That was the reason for the CARES Act. That's why there was a limitation, the original limitation of 25% for non-payroll costs. But they did come up with this additional one because, as I said, they were hearing back from small business owners and other ones trying to meet those tests where it was not as feasible, especially those who were not able to open up right away. So other expenses, you can use business mortgage interest payments where the mortgage existed prior to February 15th. Okay, that applies to real estate and equipment. So as long as it's secured by either real estate or equipment, you can use it for the interest. Note, this is not the principal portion. So if you own a building and you're making your monthly payments, you do not get to count the entire amount of the payment, only the interest that's being paid on that note, also for equipment. Now, if you're doing a rent or lease payments, a lease has to have existed prior to February 15th of 2020, okay? The other thing is oftentimes we have clients who own their own building, but it's a separate entity, or it's an operating entity. They do their operations through company A, but they own their building through Company B, and Company A pays rent to Company B, that still qualifies as long as there's a rent, as long as there's a lease in place. They will also be looking though at, although it's not stated, the SBA could look at, make sure that it's being done at a fair market value. So I wouldn't go out there and rush and make prepayments on your rent or deviations from what you were doing in prior years. Don't jump up your rent all of a sudden if you own your own building. You need to keep it consistent. That's what they'll be looking for. And then business utility payments between February 15th and December 30th under contracts existing prior to February 15th. Now here's going to be the area that's probably the room other than using for payroll that you're going to be able to take a look at. So it's your utility bills, your electric bill at your place of business, gas, water, transportation, telephone, internet, and business vehicle fuel. So for those who have a fleet of vehicles or something, I have certain clients. One's a plumbing contractor; they have their own vehicles, so the fuel in there is going to count. The telephone, internet that you have there at the office also counts. Next slide, please, Monica. Okay, here's an example. So ABC LLC is taxed as a sole proprietorship. So this is going back to what I said earlier. If you were an LLC and you treat it to be a disregarded entity for federal tax purposes, that means you file a Schedule C on your federal Form 1040 and you report it to the IRS as a sole proprietor. Okay, you received a loan for $150,000 and you spend all of it during the 24-week covered period. Okay, so your payroll costs $50,000 employee owner salary during the covered period. So your 2019 self-employment was $200,000. That means on your Schedule C for 2019, you reported $200,000. Okay, so your 2019 self-employment is $200,000 divided by 52 weeks times 24 gets you to $92,308. The amount received in the covered period is $50,000. Remember, we're talking about the owners here. So the $100,000 equivalent using the 24-week period would get you to $46,154. So even though you paid yourself $50,000 during that time period, you're going to only be able to forgive $46,154 based on the formula. So now let's say you have an employee who made $30,000 during the covered period. They're below the $46,154, so you can use their actual compensation and you use the full $30,000 for forgiveness on your SBA application. So your total qualifying payroll costs were the $46,154 you paid yourself, plus $30,000 that you paid your employee. So now you have total payroll costs of $76,154. But let's say the same thing, that 24-week period, you paid $70,000 on rent. There's other expenses, but I'm just trying to keep this example simple. If you go to the next slide, Monica. Okay. So your loan received, if you look at the top, you received $150,000. So the amount potentially eligible for forgiveness is $146,154, because going back to what we said was the payroll cost of $76,154, and then other eligible expenses of $70,000. Okay. So you're ready to turn in your application for forgiveness and saying, I get $146,000 of my $150 forgiven. However, you have to come down and the $46,154 and the 30 gets us to the 60%. You have the $70,000. Next page, Monica. Okay. Okay, so coming back in, total PPP loan, $150,000. Total potential qualified expenses was $146,154. Okay. So applying the qualified expenses to the loan requirements, which means no more than 40% for other eligible expenses. 70,000 divided by the 146 gets us 47.89%. So the rent has gone over the 40% formula. So you're not going to be able to use that amount to reduce the forgiveness. So you would take your payroll cost of the 76,154 and divide it by 60%, which gets you 126,923.33. So the maximum amount of that 150 that you'll be able to get forgiven is 126. So 76,154 of it will come from payroll, and then about a little bit over $50,000 will come from rent and other expenses. So again, it's based on your payroll. Don't think you can just take 40% of it. In this case, 40% times 150, you know, it would have been 30,000. 40% would have been 30,000. And 60,000. I'm sorry, 40% of the 150 would have been $60,000. Okay, so again, what you're trying to do is maximize the amount that you pay on payroll, which was the intention of the loan. So always look at your payroll expenses before you back in trying to treat the other expenses. Now that I have you somewhat confused, hopefully, I'm gonna turn over to Rob and talk about other limitations.
Can you turn to the next slide, please? Okay, thank you. So there are two additional significant limitations regarding the forgiveness of PPP loans. You know, the 60-40 split was really just the first one, and in reality, that's actually the last one you apply. The best way to show it, however, is to show it first. Unfortunately, but when you're actually doing the calculations, that 60-40 split ends up being the last limitation you would apply. Before you apply that, the first one you would apply is a salary or hourly wage reduction test. And that's only going to really apply to employees who are making less than $100,000 during that covered period. Basically, the way it's written is if you have an employee who's making, say, $300,000 and they get cut down to $250,000, the Act doesn't really care so much about that, at least in terms of salary, because they're basically focused on people who are making less than $100,000 equivalent during the period being cut. And the other one, which applies to both those below and above the $100,000 cap, is the full-time equivalent employee reduction test. Now, that is been one of the most complicated parts of the PPP provisions. There's been a lot of frustration and confusion regarding that, and that's the last thing we'll talk about. Hopefully, we'll clarify it a little bit, but it's still very complicated, much more than it probably needs to be. So, you know, both of these reductions are very simple in concept. You know, the first one is you trying to not have employers reduce how much they're paying their employees during the period, whereas the other one, the full-time employment test, is intended to make it so they don't either reduce their workforce or reduce the number of hours. But the actual way of applying them is rather complicated. So both apply, like I mentioned, you know, both apply before you get to the 60-40 split. So if you go to the next slide, please. So the salary or hourly wage reduction test, as I mentioned, exists primarily to keep employers from reducing their employee salaries while they borrow PPP funds. It does not apply to the reduction of salaries for those over $100,000, as I mentioned, and it doesn't apply solely to an employee leaving a company. Now, there was a lot of back and forth as to whether somebody leaving the company, which would therefore hit the full-time employee test, the FTE test, I'll just refer to that from now on, is also going to reduce the salary hourly wage test. The reason being, if you were to have somebody leave, there goes the salary out the window. So you would think the salary test, unless you replace them, would go down as well. SBA clarified that an FTE reduction would not change the amount for salary or hourly wages. So that's all this last bullet point on here means, that you actually can exclude the people who are reducing under the other test. You go to the next slide. So how do you determine whether you have to reduce the amount of forgiveness? Next slide, please. Thank you. The first step is to calculate the average employee annual salaries, or if you're paying hourly, the annual wage per employee times the hours worked for 2 periods. The first is the covered period, which again was either the date you received the funds plus it was 8 weeks, now it's 24, or there was an alternative date we mentioned earlier that basically you would run it from the first payroll following the receipt of funds if you're paying at least bi-weekly. So that's your covered period date. And then you would also calculate it from January 1st, 2020 to March 31st, 2020. We call that the reference period. If you go to, then the next step would be to divide the covered period. So again, that 8 weeks, 24 weeks from when you receive the funds to when it runs out during that, for the week period. You divide that by the reference period. So you divide it over the 120 to 330/120, and that's going to give you a ratio. Now that ratio, if it's greater than 0.75, you don't have to worry about this wage reduction test. If it's less than 0.75, there's a safe harbor. Otherwise, you're going to have to start reducing it. So if you go to the next slide. The next slide, you're going to have to compare the average of the employee annual salaries, or again, if you're paying hourly, the annual wage per employee times the hours worked, for the period of February 15th, 2020, to the period between February 15th, 2020 and April 26th, 2020, which is called the comparison period. So the way that they've come up with the basic rule isn't that hard. Actually applying this part we're looking at now in step 3 for the safe harbor gets rather complicated. There's an equivalent one we get to the FEE test later that's even more complicated. But it kind of takes the same idea of you're comparing dates, you're looking at numbers, and you're just seeing whether the reduction is in a certain way they want it to be. The reason why they kind of built all this safe harbor in here is because if you think about the salary or hourly wage reduction, they're trying to make sure that people don't reduce their hourly or salary wages during the period they have the PPP loans. And it gets complicated because someone could have a reduction prior to getting the funds, and then they're saying, well, wait, now we got the funds, we can pay our employees again. They don't really want to punish somebody for having, difficult business circumstances. Then they get the funds they need, and then they're somehow getting punished over it. So that's why they really put this safe harbor in here. And so step 4 is really the safe harbor, and you start with the comparison period from step 3. And if that ends up being less than the February 15th amount, you determine the annual average compensation for June 30th, 2020. If June 30th's annualized amount is greater than or equal to the February 15th, 2020 amount, there's no reduction in eligible payroll costs. Now, my understanding is that got pushed from June 30th to December 31st, but again, that hasn't actually been clarified yet. There's the next slide now. Let's say the comparison period amount was greater than or equal to February 15th. You are going to have to do a reduction. You're going to multiply your annualized reference period, going back to our prior slides, by 75%, and then you reduce your annualized eligible payroll costs during the cover period by this 75% amount. Next slide, please. And now we're on to the harder, more difficult of the two tests, which is the full-time equivalent employee reduction test. As I mentioned, PPP program was also intended to keep employment levels up. And so the reason they have this reduction test is to help ensure that employers keep enough of their staff employed. If there's a significant change in the number of hours they work or the number of employees on staff, they may end up reducing the amount you can have eligible for forgiveness under this full-time equivalent FTE employment test. You go to the next slide, please. Now, there was a lot of discussion at first as to what exactly does this mean. If somebody is fired for cause, does that mean now we're basically out of luck on some portion of the forgiveness? If somebody just doesn't want to work there anymore and leaves and has nothing to do with really anything else other than maybe personal issues they're dealing with, does that count? And the SBA came out with a number of things that clarified that it would not apply to. So the FTE reduction doesn't apply if you have an employee who's fired for cause. You just exclude them from the calculation entirely. It does not apply to employees who voluntarily resign. It doesn't apply to employees who voluntarily request a reduced schedule. It doesn't apply to employees who are furloughed but then refuse to return to work once things are back running again. And now these last two provisions on here are actually parts of the Flexibility Act. It did not exist prior under the original CARES Act provisions. The employer is unable to rehire individuals due to COVID-related safety concerns or employees or customers. You don't have to count them if there's a legitimate COVID issue there. Or if the employer is unable to hire similarly qualified employees for an unfilled position by the end of 2020. Now, everything I've seen so far in that last provision tends to suggest it has to be someone who's particularly technically skilled. So you couldn't just maybe replace a lower skilled worker with somebody else and say, well, I can't really replace them because they're not qualified for that. But if it's somebody who requires a particular skill set training, then you may be able to use that provision. They haven't actually clarified, because the SBA hasn't come out with its rules yet, what exactly that means for that last part, but that's something that they're still working on. If you go to the next slide, please. So let's say you have, beyond all those people who are exempted from the FTE test, you have to figure out, okay, we'll have an FTE reduction. And the first step is to determine the company's number of FTEs, again, full-time equivalent employees for the covered period. And there's two methods for doing that. There's the standard method and there's the optional simplified method. Now, the borrower gets to choose which one they use. And so really, in reality, we say there's two methods and you choose, use one. In reality, you're probably going to run it for both methods and see which one's more preferable. Whichever one gives you the higher FTE amount is going to be the one you end up wanting to use. So the first method, you basically take the average weekly hours spent by each employee during the covered period and divide each by 40 to create a ratio. You add the ratios for each of the employees together to create a combined ratio amount. Now, employees who work more than 40 hours are capped at 1. So a full-time equivalent in this is defined as 40 hours. There was some discussion early on as to whether it was going to be 40 hours. If you look at the healthcare reform a few years back, they treated 30 hours as a full-time equivalent employee, but the SBA clarified that no, 40 is. But if you're working 50, you're capped at 40, which is really a 1. And so that's one way of getting your FTE ratio amount. The other is this optional simplified method. And basically what you do is you take each employee who's working 40 hours or more, you give them a 1. Every employee who's working less than that, you give them a 0.5. You add it all together, and there's your simplified number. Now, when would you want to really use the standard over the simplified? Well, if you have a number of employees who are working part-time, and it ends up being less than 20 hours a week, each of them, overall, generally seems to be the case. You may want to use the simplified, just going to be bumped up to 0.5, versus if you have a bunch of employees who are part-time, but they're really working 30 hours a week, you're obviously going to want to use the standard method, because it's going to give you a higher number. So if you can go to the next slide, please. So in step 1, we calculated that average weekly FTE ratio, and now you're going to compare it to one of 3, really 2, unless you're a seasonal employer, periods of your choosing. And again, like the other one, you're probably going to have to run it different ways and see what's more preferable to you. The first one is to run it from, determine the average FTE during the periods from February 15th, 2019 to June 30th, 2019. Now, this period is basically there to kind of get a sense of what your employment level was in the prior year before all of this COVID hit, to see, okay, well, what number of employees should we really expect from them before everything kind of went south. The other one you could use is from January 1st, 2020 to February 29th, 2020. Now, the reasoning behind this is sort of similar. It's okay, well, during this period, it was the beginning of the year, coronavirus was there, it didn't really hit a lot of people yet, things hadn't really shut down yet, so maybe this is a good ratio to use to figure out where the business was in terms of its number of employees. And if you're a seasonal employer, which most people aren't, you also have the option of using any 12-week period between May 1st, 2019 and September 15th, 2019. So if that actually applies to you, there's another period you could consider using that might be more preferable. Next slide, please. Now, if this FTE from the covered period from step 1 is the same or higher than that from step 2, where you got to pick your periods, you don't have to reduce your FTEs. They basically, the way of thinking about this is, okay, during my period, I received the funds, I had just as many as employees, and there were just as many hours or more than my comparison period, which was the sample I should be using, then I didn't reduce my workforce, so I shouldn't be reduced. Now, most of the time, that's not going to be the case, and that's when you get to the second prong on here, where if the FTE from step 1 is lower than that from step 2, you have to look at your average weekly FTE for 3 periods. Now, this is where it gets fairly complicated. You have to look, and this is sort of the safe harbor provisions. Now, before, if you don't, as I mentioned, if you don't get to this part, you don't have to worry about any of these dates. So the dates you're supposed to talk about is really only if you fail that first part of step 3. Assuming you failed it, the 3 periods you could look at are February 15th, 2020 to April 26th, 2020. You figure out your average FTE through that period per week. The pay period, which would include the date of February 15th, 2020, is your second option. And then your third option is literally just looking at December 31st, 2020. Now, if you're still using that 8-week period, because you've chosen to do that, that's going to be June 30th, 2020, under the prior provisions in the CARES Act. And then the next slide. So for step 4, if the FTEs for these periods show essentially that the company had a temporary drop in employees, but ended up rehiring people during the period they had the PPP funds. So in other words, your December 31st, 2020 period was higher than February 15th, 2020, and that was also higher than April 26th, 2020. There's no FTE reduction. So if you fall within that window, you're not going to have to be basically penalized for the fact that you had employees leave or reduce their hours, and it wasn't for any of those other exceptions we mentioned earlier. And so I'll turn to Rudy for what happens when your PPP funds are not forgiven.
Of anything, the entire thing has been evolving, but I think the most confusing part are the FTEs, your FTE testing. Some of the other ones are still out there and you can figure out, but the FTEs is part of the most confusing. That's why I told Rob, you get to talk about the FTEs. So, also, if you've been seeing me get up every once in a while, I've been looking at, only because our screen's further away, I had to look at the commentary coming in. So just in terms of some of the questions that are coming in. Almost done with our presentation, but what happens when your PP loan is not forgiven? So only any loan balance which is not forgiven is treated as a loan and it's a 1% interest, okay? Now, no payments of interest or principal due from the borrower until the SBA remits loan forgiveness amount to the lender, or if borrower does not apply for loan forgiveness 10 months after the end of the borrower's covered period. So in the instances where there's a portion, kind of the example where we used earlier, we're looking at that 150,000 and you're only able to use 126,000 as forgiveness. So now you have roughly a $24,000 loan at 1%, which is either, if you receive the loan before June 6th, it's a two-year loan. If you receive your loan after June 6th, it's a 5-year loan at 1%. So it does give you time to pay it back, and like I said, at 1%, you can probably get cheaper money than that. Okay. Next slide, Monica, 36. Okay, other considerations. Right now, any expenses used towards a PPP forgiveness cannot be deducted on your 2020 return, which basically means is, okay, if I received, going back to the example we had before, where we had that $150,000 loan and they received $126,000 of forgiveness. If you remember, roughly $76,000 for payroll and $50,000 for rent and other expenses. You will not be able to deduct those on your tax return because in essence, you'd be getting a double dip because you didn't have to include the amount in income. So on the other side, the IRS came out and said, nope, you no longer get a deduction also. However, this one could change, and there's sentiment in Congress. Senator Cornyn proposed something last week, and this one seems to be, would you agree, Rob, that this, of anything, you're probably going to see that Congress is going to come out and allow a deduction for the expenses that actually come in. So with that being said, you get what I call extra juice on these PPP loan forgiveness, because by the example is, going back to the other example where there was $126,000 that you don't have to include in income, but you get to deduct that $126,000. Just using, let's say, a flat rate of 20%, you're talking, there's an extra $24,000 of tax deduction that you get. So that 126, throw in an extra 24,000 of tax deduction, it's really worth about 150,000 to you. So be looking for what Congress does. I know the House will not be back till June 30th, so they won't vote on it till then. And things are really fluid on this. This is the ever changing. I think we're going to be getting, between Congress and the SBA, we're going to be getting guidance between now and the end of the year on how to treat a lot of these. Next slide, Monica, 37. Okay. If able, keep a separate bank account for your PPP funds. It's easier to, as far as presentation, if you have to with the SBA, if you get audited, it's easier to show how it's coming out of one account instead of different accounts. But if you can, it's too late. Clearly track the use of funds. What we are doing with some clients is making sure we have a master spreadsheet showing which funds count, which funds do not count, coming out of payroll and different ones. So we're tracking it real good for our clients. Always prioritize payroll. If you can, payroll, because that will keep you within what the intent of what the CARES Act was. Again, keep the spreadsheet. If biweekly or more frequent payroll, consider using the alternative covered period. So that'll give you a time period, because the big thing was it had to be paid and incurred during the time period. So there were certain, especially what was happening was people don't have to do special payrolls just to qualify within that special time period, which are no longer required if you use alternative covered period.
So the one thing I want to say about the alternative covered period too is that, the typical covered period is going to be 8 weeks, 24 weeks from when you get your funds. The alternative payroll period, if you qualify because you're biweekly or more frequently, is going to be starting whenever your payroll is right after you receive the funds. And so part of the reason why that's better too is you can actually more readily show to the lender, okay, here's this payroll period, here's this payroll period, instead of having to kind of say, okay, well, it's some portion of this first payroll, and it's just much clearer when you're actually using this period, alternative period, if you're eligible for it.
Okay. Next one, Monica. Okay. Best approach for tackling. As you can tell, even those of us that do this for a living, the rules are complicated, and the initial forgiveness form was very confusing. The SBA will be issuing an updated form. They issued the first one 2 weeks ago.
Memorial Day weekend.
Memorial Day weekend. Yeah. Friday night again. Friday evening they issued a Memorial Day weekend. So, but due to the Flexibility Act, the SBA will be sending out a new form. Seek professional assistance. Talk to your CPA definitely to help you out with getting the forms done. To request the forgiveness, there's a lot of documentation to the lender. One of them, lead schedule, receipts, copies of checks. Rarely do people get copies of checks, but that's one of the requirements under it. There may be some loosening that we'll see from the SBA. You must retain records for 6 years. Documentation submitted with the application, expense data, and how you computed it. One thing I also want to, that's the end of the slides presentation, but one thing, there's talk, and don't take this as any type of, but this is just talk amongst what some congressmen have submitted, and I've heard amongst bankers, is possibly just forgiving loans under a certain amount. And I've heard everything from 150,000 to 350,000. Again, there's no formal proposal. It is just what has been talked about because of all the confusion amongst it. And by that, I mean, the SBA or even Congress may come out and say, if your loan was less than this amount, we're not even gonna require you to fill in the loan forgiveness application. Now, you will still be subject to audit. So if you took the loan, the SBA can still come in and say, hey, did you borrow the funds? Did you do it properly? But for the most part, they're looking, at some, just because of all the complications and how much is required. With that being said, I'll turn it back over to Barbara. Thank you for your time today.
Rudy, thank you. Rudy, thank you so much. Just to let everybody know, if you registered for the workshop today, we will be sending you this week the link for YouTube. Also, the recording will be available on our Facebook page. So if you want to review it and share it, please feel free. But Rudy, Robert, I have some questions for you from our participants. And the first one really has to do with, before I got my PP money, I had to use my own money to keep my business going and pay my bills. How do I get that money back?
Okay, so it's not really a matter of getting the money back. It's just going back to the period where it was covered. And I understand you lent yourself or, put in funds from yourself. You have to just go back to that covered period, either the 8 weeks or 24 weeks. So it really doesn't matter, like I said, if you put in funds, you're just testing that you spent the funds during that period for the required amounts. So I understand, okay, I lent my company $15,000 to get to that time period. It goes from the time period that you got the money from the SBA, and you got that 8 week or 24 week period to do it.
So I could just transfer the money back to my my regular bank account.
Yes, you can, but you just have to provide then that you did actually spend funds on the required expense, the forgivable expenses.
Perfect. From Liliana, she wants to know if my payroll exceeded my original or my PPP loan, can I apply all of my money to payroll?
Yes.
Perfect. From Jennifer, is the $15,385 cap increasing from 8 to 24 weeks?
And so that generally commentators have been thinking it's going to be increased to the 46,000, but without the SBA clarifying, you can't say with 100% certainty. But the general consensus seems to be yes, it's going to increase to the $46,000 amount.
Perfect. Can I use my PPP money to pay for subcontractors or contract labor?
No, unfortunately not. They have to be employees. If you're a contractor or independent contractor, they have to submit for PPP loan on the based on their own. So you cannot include. At the very first, there was confusion when it very first came out, but the SBA, that is one thing they clarified early on.
So what I suggest, if any of the small businesses out there, if you all have 1099 contractors that have not applied for PPP, those applications are still open, and if they need help, they can contact EGBI, and EGBI will help them apply for the funding through our partners. So for owners draws, again, from Liliana, she had limited, and a lot of business owners have limited what they've been taking out and gotten behind on their personal bills. How do we catch up or can we catch up so that the money that we're withdrawing from the company is probably more than usual because it wasn't sufficient the past 3 months?
Yeah, I mean, since I assume you're talking about a disregarded entity, single member LLC.
Mm-hmm.
Yeah, so, as long as you're not pulling out more than, you can, but forgiveness are only going to limit it to, either your 2019 net employment, self-employment income, or $100,000 equivalent, or the amount that's actually paid to you, and you're allowed to take bonuses. So really they were still waiting for some clarification as to some of the treatment in terms of employees or also owners of the entity. But as of now, it seems like you can go ahead and get up to the amount that it was the prior year. So it turns out that you're paying yourself more during the period to sort of catch up. That's fine, but you're still going to end up being capped to the equivalent of the prior year or the 100,000, whichever is less.
If I got my PPP on May 1st, can I use 24 weeks to reach my forgiveness?
Yes.
Yeah, but also you can use the 24 weeks, but do look at whether you're better off with the 8 weeks as opposed to 24 weeks. Don't just automatically think, I'd just rather use the 24 weeks, because in some cases, the 8 week really works better for you, but absolutely you can use 24 weeks.
Okay. And then I think that's all of the questions that I have so far. Let me check and make sure I didn't miss anything. So if I didn't have to bring back all of my employees by the end of the time period, how am I going to get, what do you recommend I do? Am I going to get penalized in some sort of way?
I mean, if there's a reduction in your workforce and you're not able to get any, none of those are qualifying for those exceptions before you even get to the FTEs, people voluntarily leaving or fired for cause, there is going to be a reduction unless you can get them back before the end of the year.
And then Jennifer asked a question regarding, Rudy, what you mentioned earlier is, why would 8 weeks be better to use than the 24 weeks?
Part of it would be if you have employees over $100,000, because then how much you can spend on them goes down from $15,385 to the $14,100. So you got those limitations in there. And then also some folks, if you meet the payroll test, if you already meet the 60-40 at the end of 8 weeks, it'd probably be best just to get yours done and into the SBA's hands sooner than later is what you really want. Because if there's some determination that that part of yours is not forgiven, you want to know right away. I would probably say 90% of folks are better off with the 24-week period, but there are some exceptions that are going to be the 8-week period that work out. But for the most part, 24 weeks would be probably the better way for most people to go.
And one thing I think that it's important for everybody to remember that depending on your financial institution, the documents that they require might be different, right, Rudy?
Oh, absolutely.
And so before you start filling everything out online or however, make sure you read through their whole application and understand it. Get with your CPA, get with your banker, and make sure that you have answered all of your questions before you just say, here's my money, here's my forgiveness, and fill out. Because one thing that we don't want is we don't want anybody to miss out on 100% forgiveness. That's key.
Absolutely. One more thing also, Barbara, is what we have found out also, some folks is in the rush to get the loans out, the banks weren't underwriting it exactly. So we have seen some folks who overborrowed. In other words, they took out more money than they were really eligible for. So they're coming down and they're finding out, oh, I borrowed too much. On those, I would suggest that take a look at what you have. And if you have overborrowed, that you do return the money back to the bank. It's through no fault. It was just, they came out so fast, and how much you could borrow and everything. But if for some reason you borrow too much, according to the guidelines, the amount in excess of what you borrowed, I would definitely get back to the bank.
Okay. And is there a time frame when we have to do that by?
There's no rules out there when you should, but my suggestion would be at the time of when you do the application for forgiveness, that's the time that you would do it.
I mean, the good news is with the periods expanding from 8 weeks to 24 weeks, it seems like that's going to be less people than if it was just the 8-week period, but it's still an issue.
And then Gabe wanted to say or asks, if I'm out of my PPP and start using business funds for payroll, how can I get that back?
If I understand the question, I mean, once you've started, you've used all your PPP funds, the rest is just then turns into normal operating, on your own. If I understand the question correctly.
I'm not too sure on the question, but I do have, if I was given, let's just say 15,000 for PPP, but I was also given an idle loan or the advance, and within the period, my payroll was 100,000. The first 15,000 I can use for PPP, get all of that forgiven, and then the remainder will I be able to use my idle money?
No, I do know though that there's that $10,000 reduction.
Yeah, I mean, there should have been a $10,000 reduction in your PPP loan amount.
Mm-hmm.
So in theory, you would have used, in other words, that would have been your borrowing base would have included the idle amount. So your PPP should have been 10,000 less than what you could have borrowed because of the idle.
Okay. Yeah. And the reason why I asked that question is because we've heard so often that you can't use idle and PPP for the same thing. And so I just wanted to make sure that once I run out of my PPP money for payroll, I can then use the idle money for payroll.
Absolutely.
Okay. That's really what I wanted to make sure. Does anybody else have any other questions to fill in? What if we got the advance after the $10,000? What if we got that after the PPP? How does that get calculated in?
Shepherd? Say that again?
So if you got your idle after the PPP was funded.
Mm-hmm.
So
yeah,
in terms of
I haven't looked at that yet.
You got us on that one, Barbara.
Yeah, that happened to us, EGBI. We got our PPP money before we got our idle money. Okay.
Let me get back to you on that one, Barbara.
Perfect. And we'll post this question. And I don't know if you guys know this, but how long do we have to report idle loan information? Has any information been
You're
released?
stuffing us on this one, Barbara. Sorry.
Sorry, I know we're not supposed to talk about idle, but they're kind
No,
of
absolutely. Absolutely. I'm just sorry we don't have the answers for you.
That's okay. I don't think a lot of that information has even been released yet, to be perfectly honest. I don't know if you guys seen any information on idle.
There's been little.
That's what I thought. Christina, hi Christina. She's asking can my payroll now be spread over 24 weeks to be forgiven?
I'm not entirely sure I understand that question, but one of the things you're going to potentially run into is the wage and income reduction test. So, I mean, as long as you're not violating that, if the question is, can I take 24 weeks of payroll and have it count, then the answer is yes. If you're talking about sort of moving things around to spread it out more, that's not so clear.
So I believe we should, as business owners, we should try as much as possible, stick to our regular payroll. And then really, if we are slowly bringing back our employees, we have the additional time to get the max amount forgiven.
Barbara cannot be said better than what you just said.
Thanks. I don't think we have any more questions. If you all online, Monica put Rudy's email, you can also reach EGBI. If you have additional questions, you can post them on our Facebook page. We will be contacting Rudy with a bunch of questions. I appreciate it. Oh, wait, I have a couple more questions. Can you prepay eligible expenses like mortgage, rent, etc. for our PPP?
No, it has to be paid and incurred during that time period. So you cannot prepay rent, you cannot prepay mortgage. It's paid and incurred during the time period.
Okay. Tax-wise, I've seen that QuickBooks can be, QBI can be affected by what you are forgiven. Have you heard of anything like this? And I guess QBI is QuickBooks.
Qualified business income. It's the 20% deduction, the 199A that was on the most recent tax reform. It's going to be based on your net income, and so depending on what you're using. But if you're not able to deduct expenses, it should, I would think, impact your QBI.
Okay, and then if I pay myself $5,000 a month for 6 months, can it be considered payroll and as a sole proprietor? And so I take owner's draws.
Yeah, so owner's draws, and you said 6 months. Remember, it's 24 weeks. Be real careful about that.
Yeah.
So yes, as long as it meets all the other tests that we went over earlier on what you're limited on your sole proprietor, yes, it can be paid out, what you paid out over 24 weeks as a sole proprietor. But still remember those other tests there were a bunch of tests that we went over as sole proprietors, but yes.
Yeah, so definitely everyone, Terry, that's you, and others that are sole proprietors, make sure you go through everything on the PPP forgiveness application. It's very important. Yes, Brenda, you will be able to use 100% of your PPP for payroll. If you don't have to use it for rent or utilities, correct, gentlemen?
It's even better if you just on payroll.
Yeah, that's what I've been advising my clients, to just use it all as much as you can for payroll. Will the PPP and idle advance be considered income and
No.
will be taxed on? No.
No. So it's either forgiven or then it's a loan, a straight loan. So it won't be income either way.
And for those of us, or for those people that don't have great CPAs like you all, and we do our own bookkeeping, how should we categorize this? We manage our own QuickBooks. How should we be categorizing the PPP loan and the idle loan on our financial statements?
So this is going back to debits and credits. So your first one is when you receive the money, you debit your cash, and then you would credit a PPP loan. So it's on your balance sheet that way. Then as you spend down your expenses, do them as normal. And then whenever you do get your forgiveness whenever you apply for your forgiveness and you get it from your bank, Then you're going to reverse whatever it is. You'll then debit your PPP loan, which was a liability, and then you'll credit non-taxable income. So that way it's a separate line item as non-taxable income for the amount forgiven.
Perfect. And then the final question, I promise, can we contact you to help us apply for forgiveness?
Yes, you can contact us, but if you have a current CPA or anybody, absolutely. I'm not trying to just, everybody in this industry is overwhelmed. And if I can't get back to you right away, I apologize. It is, as you can imagine, like I said, 34 years of doing this, and this has been an incredible year. So if you email me and I don't get back to you right away, please note I am looking at it, and we'll get back to you as soon as we can.
Thank you, gentlemen, so much. I appreciate you taking the time to visit with us. As those of you who are watching, this is very complicated, and even our CPAs were like, they're having a hard time. And this is an evolving program, and hopefully new guidelines will come up. As Rudy mentioned, that they're going to be a little bit more lenient with us. The biggest one last piece of advice, I think you gentlemen can agree, and you mentioned it several times, is documentation. You have to make sure you are documenting and you are keeping track of everything, correct?
Absolutely.
Absolutely. Well, thank you all so much. I appreciate it. And like I said, this taping will be available later on this week. If you registered, we'll send you the link, and it will also be available on our Facebook page. Thank you all so much. Thank you, Rudy and Robert. We appreciate it. We'll see you all later.
Bye.